everybody, it's Omar. It is Saturday, August 18th, 2018, and I wanted to make this video just talking quickly about technical analysis, kind of reviewing the plays in the video that I posted, just so you can see how technical analysis really works. Talk about and then just pull up a few charts, like how do I look at stocks like pre-market, especially stocks that I potentially may want to short. Because that's my favorite thing to do, is short not low flow, but just short penny stocks. They could be low flow, they may or may not be low flow. It just really depends, you know. I don't care if it's technically a low flow or not a low flow. If the setup is right, I'm gonna short it. But low floats tend to give you the most percentage. That's why I like them. So I made a video. Let's get into it. So I made a video for a couple of days ago, talking about my watch list for yesterday. All right, and yesterday's watch list, you can go back and watch this. My YouTube channel is watchotrade. You know, and this was the video. Okay, so it's all there, like, for you to see that I ain't making this shit up. If you watch the video, you can see exactly what I was talking about. So I did it quick, actually, too. And I was talking about how I build a watch list, and I look for the stocks that are holding their highs, or stocks that like really got beat down, you know, with a lot of volume traded, above average volume for the day. And you know, you can watch the video. I have plenty of videos on how to build a watch list and stuff like that. But some of the watch stocks I put on was TiVo was one stock, and I'm gonna pull up the bigger chart so you can see. Oops, let's do this. TiVo. All right, so I'm gonna pull up the bigger chart now. The reason why this was on the watch list, because, you know, it went on Thursday, it went from $22 to $24, right? And it was just in its upward trend all day. So what I did was, you know, I mapped my support and resistance lines. Now these lines that you see here are the lines that I mapped on Thursday in the video. During the video, I did this like during the video, so you can see. So I was explaining to the group how, you know, I was looking at the 1 year, and I was showing them where the trend is, and, you know, I was telling everybody I think this could potentially go to $50 at some point, and I was explaining why. You can watch the video, because there's a gap to fill above at 50, and, you know, I said it was on an upward trend, and I was telling them how, you know, you should map overhead resistance just to see, you know, what's the next resistance level above, and all that good stuff, right? So let me pull up the 38 15-minute chart. So, you know, I was explaining to them how this was the high, and the next potential resistance point above that was this 2444 level, right? And I was telling people not to buy the breakout, because, you know, you want to see a stock break above it, pull back, hold, and then go higher, right? Well, and then what I also explained was that sometimes these stocks that have these big rips at the open, they either gonna break out right at the open, you know, pull back, find its support, and keep going. Or what happens is they pull up, they pull back, people take profit, and they kind of find support at the previous breakout level. Now, in terms of this run here, this section was right over here was technically the previous. This is kind of sort of where it formed the breakout. All right, on the way up. I mean, this was the highest point. I mean, guess technically this is the breakout level, but right in this range. Okay, I was mapping my support and resistance lines. So basically all I did was, and I told everybody I'd take the 15-minute time frame, and this hasn't happened yet, so it was at this point. So I mapped support and resistance here. So here's some resistance here and some support here, and, you know, I was going up and down, just showing everybody how I mapped the lines, looking at the pivot points and supporting, you know, starting with the 15-minute time frame, and then I would go back 30 days of 5 minutes, and then look for support and resistance in these levels to map off of. All right, you can watch the video. So I had mapped the lines based on the support and resistance videos. I mean levels, and then the market. So look what happens. Friday pre-market, it starts gapping up. It breaks above it for a second, pulls back. This is the previous day's close price. I even said in the video that the previous day's close price always acts as support and resistance depending on where on the chart it is. And look what happens. The market opens, and in this 2-minute time frame, look, the stock goes up, pulls back, goes up, can't hold it, and you could short it here. Look at what the stock pulled back to, that previous level. Okay, So this was the breakout level, and this was the level right before it. Let me zoom out, see if we can see it. Okay, so here it is, right? This is the previous breakout level, right, that I called out. Look what happened. Bounces off it, pulls up. Look at this, gets rejected at overhead resistance, pulls back, forms that double bottom that I said don't buy breakouts, because you need to see that like that strong confirmation that it's gonna hold. So you see how it forms back, it goes back, pulls back, performs that high low. It doesn't really get there, and then people buy because they're like, shit, this is not breaking down, and it just continues to go off. So that's telling me that Tiva is still in a bullish trend. You know, it's still in a bullish trend. But at the open, you could have shorted this, risking off this 24.29 or the 24.44, and it doesn't seem like much. But let's say you got in here at 24.20, and you came back at almost 23.49. It got to a low of 23.45, almost a full point. You know, shorting. You know, and then you could have longed this. All right. You know, and then you could have longed this over here when it held this level. Look where it literally bounced off of, 23.62. 23.63 actually, and then it just took off. Guys, you know, I ain't making this shit up. This is all support and resistance. You look at the bigger time frame, you say, all right, the stock's an upward trend, people are taking profit, but they're looking, where am I going to buy? They're saying, damn, you know what, it's showing strong support here, it's not breaking down further, so they're buying. That's what's happening. And shorts that are shorting here are covering. This is people just selling, taking profit, and then these are new buyers coming in, and short sellers covering that are causing the squeeze. That's basically what happened, and I explained all that in the video. You know, a couple other places. CVSI, perfect example. I was talking about breakouts because I didn't really love anything, right? And I called this out on Twitter before it happened. You guys think I'd be doing this all the time? Look what I said. This shit all happened before I even called it. Look what I said. Okay. This is what I said. CVSI, and I meant to say perfect, but I'm typing this fast on my phone because I'm literally working, but I'm trying to look at the market and, you know, just show you guys. Perfect example of what I spoke about in last night's video. Not buying the breakout on the spike. Wait, and I was supposed to say wait. Sorry guys, you know, the spell check, it changes the word, and I just write this fast and send it because this was happening in real time, but I want you to see me call this out before it happened. That's why I'm typing it so fast. So don't buy the breakout on the spike. What you do is wait to see if the stock pulls back to breakout level, and if it holds its support, then you buy, risking off that level. So when I wrote this and I submitted this stock at that point was at 604, right? The breakout just happened. It hadn't pulled back yet, because I'm trying to make a point. I'm showing you how I'm calling this shit out in real time. Well, look what happened. The stock pulls back, finds support right in that level, and then continues to go and ripped all day. That is when you buy. You don't buy when it breaks out. You want to see it pull back and find a support level to risk off of, and then it just and you know, that is technical analysis. That is what, if you're in a room, that's what your guru should be teaching you. You know how, you know, look what happened, right? The stock broke out. Here's a 2-minute time frame. Right, broke out. A lot of chasers broke this. A lot of the, you know, warrior trading type people, Tim Sykes people buy this on the breakout, right? And it pulls back, and they panic and they start selling. But you don't buy this because you want it to pull back. And I'm going to show you an example of a fake out in a moment, and why you don't buy the breakout. Because sometimes the stock will break out and then just fade. So what you want to see is, you want to see it pull back, kind of fake out. Sometimes it breaks below it, and then it starts consolidating sideways, and then it takes off. You know, you just gotta look. So how do you know? Well, you're gonna start seeing on the time and sales. Now obviously there's no, but here the time and sales, you're gonna start seeing a lot of green prints going through. You're gonna seeing a lot of bids coming in. But when you see a lot of those green prints come through, that's when you know the momentum is shifting. The green prints, the time and sales is better than actually the level 2. Because on the level 2, a lot of times you'll see bids stacking, but that could be fake. Sometimes there's people prop bidding, you know. But when you see the actual sales getting executed, that is letting you know that, all right, people are really buying, as opposed to somebody just propping a bid, putting a big bid in, and having you think that the stock is going to go up when it's not going to go up. So at this point, it went up, and it continued to go up for the rest of the day. It went all the way up to 6 $6.81. So it just, and I just mapped this later on, but you know, it just ripped all day, you know. So what you would do is map your support and resistance and looking to see how it's going to react on Monday. Is it going to pull back to the breakout level, that 588, and hold, or is it going to run? Is it going to break above 681, pull back, hold, and then keep going? All right. So you wanna see how that's going to react. But at some point Monday, what's going to happen is either going to pull back to one of these levels, and I didn't map this perfectly. You know, I just did this when I was looking at the chart yesterday. Obviously, if I was doing this real time, like the way I normally do it, I look at the 15-minute time frame, and I would add. Oh, it's just one other place I would add right here, because there's a strong area of support right here, the 15-minute time frame, and I would fix that. Oops. So what is that? 619, and it says 613. Oh shit. Oops. No. So here I would put 613. You guys get the point. I'll just fix this. But oops. I don't know. What the hell did I do here? Oh, 601. Duh. Sorry about that. 601. So that is what I would do, and I would look for Monday, the continuation. Now I think this stock is just gonna keep running. They'll have 1 or 2 big red days coming, but this stock doesn't seem like it wants to slow down. It just seems to be going and going and going. So you know, that is what I'd be looking at Monday to continue to buy. All right, and I called that out all in the video, and I talked about CBSI potential. DUST. Okay, this right was on my watch list as well, because this stock right held its highs, right? It's been on this upward trend, right? If you look at the daily, you can look at over the last year, you can see, you know, it's been up. Now it doesn't always happen, but there is a gap to fill here at this 34 level, so you could potentially think that it's going to fill that gap at some point. Doesn't always happen. Not every gap fills, but it's a strong strategy. Okay. It definitely happens like all the time on low floats or penny stocks, but these are these higher price, you know, this is an ETF, so it's a different kind of stock, but same principle. So look what happens pre-market, right? The next day after. So this is the support and resistance levels that I mapped, right? And again, what I do is I go on the 15-minute time frame and I just map, you know, where the trend changes. So this was an area, this was the high, so I mapped this, and then this was another area where it pulled back and held. This was the high, so that's why I mapped these on the 15-minute time frame. And then, you know, you can always go back and look at the 5-minute as well to see where you want to map the stock on the 5-minute time frame, you know, to see if there's any other areas, and you can do that as well. So I mapped these areas, okay, and look what happened. The market opens, and I like to look at the 2-minute time frame, 2 and 1 minute, you know, just depends. But look what happens. Stop starts fading, right? It's not a lot of volume, but look what happens. Market opens and boom, right in this 2-minute time frame, it can't hold this. And what you're going to see is a lot of red prints. This is VWAP. It can't break above VWAP. So VWAP, basically VWAP's an over-under. When stocks are above VWAP, that means people are profitable, and when it's below VWAP, that means people are on the negative. You know, so it can't hold VWAP. That's really the only indicator I really technically pay attention to be quite honest with you, is VWAP. So here's VWAP, can't hold it, and you could have went short, risking 41.97, risking that level, because right, when you look at the bigger time frame, all right, this was a level, all right, okay, this was the level. Let me pull up the 15-minute time frame. Let's do 30-minute, 15-minute. Okay, this is an important level, because this is where it found support. Okay, found support. All right, it found support here. Okay, so what happens is, right, and it doesn't have a lot of volume. It's only 700 shares, so in theory you're not supposed to pay attention to it because it's not that much volume. But in my experience, these things do matter. In my experience. And look what happens. Stock can't hold it. Stock can't hold it. Also, okay, look right here in this candle though. This is 208,000 shares. So this is where, you know, it's all in that same support level. So it can't break it. you know, and this candle's three, you know, this candle did have a lot of volume as well, but it can't hold it. All right, so when you're looking at it like me, this is how I simply trade. I see that the stock can't hold that level, and I see the red prints are going through, the bids, the sellers are stacking, and you see VWAPs there, and you just short it, risking this. Or you could risk the 43. Now this is too high to risk, 43.18. So if you're gonna risk that the high day, you gotta be careful how many shares you take. You don't wanna blow up, so you wanna risk as much as you're willing to lose in your account. You know, if you want to risk the high day, I wouldn't. This is too much range. What I would have done is, if I'm risking anything above this, I would risk this, because this is a consolidation level right here. So I would have risked right off this 42.18. And if it don't hold, so somebody sent me a message on Twitter. They're like, hey Omar, every time I make some money, I wind up losing it all. So what are you doing? How are you staying consistently profitable? I'll tell you how I do it. If a stock breaks my level, I'm out. That's it. I don't hold and hope. I just get out, because I can always get back in. One of the advantages that I have over a lot of you is that I'm over PBT, right? I trade with a much bigger account, so I can, you know, make multiple trades. If you're making only 3 trades per every 5-day period, rolling period, because you're under the PDT rule, and you don't have like a TradeNet account where you can trade, or Sure Trader where it's an offshore broker, then you're restricted, so you're scared to, you know, cover and make multiple trades. So that's tough. You know, it is tough. It's tough to trade that way. But you could have took this, and look where it bounced, guys. But look where it bounced. Look where the stock it broke below it, and there is some support here, and there is some support technically here as well. I mean, but this to me is the clear, you know, right here, this is some support right here. I didn't map it, but you can see right here there was a pullback, and there was a support there. So in theory, but to me the big support level is really here, because there's a lot of consolidation here at 39. So look what happens, guys. The stock fades, right? And look what happens, guys. Each time it spikes, it can't get above the previous resistance level. So at this point, this is the previous resistance level on the 2-minute time frame, and I'm just talking about 2-minute time frame, right? Look, it gaps down, pops up. Okay, it can't even get back to the previous resistance point. That's where you know that it's still in a bearish trend. It's in a channel form. Now look, have I mapped this? Let's say I mapped this. Look what happens when the stock spikes. You see how in this channel it still can't break. Support became resistance, and this is where you can go short. You can re-short it right here. That's how you know these are what we call price channels. That's how you know that the stock is in a bearish trend. And look at where VWAP is. It's not a coincidence. All this is aligned, and you could have went short here. You know, look where it spikes up. Look at this. This is a support level, right? Look what happens. It acts as resistance. Another area for you short. Then eventually, look what happens. It finds its support here at this 38.70 range, which is near that 39. And look what happens. It kind of gaps up, pulls back, and then all the shorts cover, because they see that double bottom forming, and they see the consolidation at 39, and they cause, and that's what dip buy is buying. They take this up, but look where it can't break. The previous level that was support is now resistance. And look, gets up to that level that we have mapped, double tops, and then fades all day. Look where it bounces off again. Guys, I'm not making this up. That's all stock trading is, and you're just trying to get a piece of that. So these other trading rooms that you see, like these when you watch a guy like Steven Ducks, or these new guys like Alex20, A2R 09, and Modern Rock, that's what they're doing on the low price stocks. They're just, I'm gonna show you in a second what they do. It's the same principle. It's just trading off support and resistance. You know, that's it. If you're a day trader, you're a scalper. So if you buy and sell, if I buy a stock at 9:30 and I hold it to 3, I still scalped it. I didn't hold it for a full trading day. You know, so people think scalping is like they scalping for cents for a few minutes, few cents. No, scalping is any time between 9:30 and the time you close, the time the market closes. And look at the range here. This went from 39 to 41. You could have got 2 points on the upside. You could have got from 41 to 39, 2 points on the downside. You could have traded this both ways, got 4 points all together, and then really traded it again. You know, that's kind of what the technical analysis is. look, I also had this I put after the fact, so I'm gonna skip it. I'll just talk about one other stock. I put PETQ on that watch list because I was trying to look for a stock that was down, and what I wanted to show is stocks that close. So this stock was up here. Let me pull this. Let me do previous close day. Let's say no, so you can see the previous close day price. All right, so this stock was up. So this was the beginning of the run, right? It got up to 37.45, gave back half its gains, but it couldn't hold it. Now what I was looking to see was, what I was hoping, what I like to do with these stocks is I like for the stock to sort of spike right into the area consolidation and then fade. What happened was with this stock, if we zoom in a little bit more, was, you know, the market opened. This is the previous day's close price. It went red for the day. So what happened was it closed not really weak. I mean, weak would be like, really weak would have been like down here. But it closed here. It gave a half its gains and it went red for the day. And the previous day's close price was acting as resistance. And then you look at VWAP here. So what happened was the stock faded. And this was the level we mapped, was that high level. It spiked up. It couldn't hold this level, right? And then just kind of broke down, you know. And from here to here is what, 32.23. So what you're doing is, if a stock breaks down a level, you got to look at what's the next level below. So if I was trading this, me personally, I would have mapped, because I would have first went on the 15-minute time frame to see. And on the 15-minute time frame, this would have been the area that I would have been the most concerned about, right here. Never got back there, and here, because these are big areas where you see the bounce, and then this is the pivot point right here. So I would have probably mapped those areas. I would have went back on the 5-minute 2 and see how it reacted. And because there's a lot of potential pitfalls here, I would have been concerned. So like for me, the safe trade would have been like to see the pop and it not hold this level, and right in this I would have traded, risking off 33.56, because I know that that's a strong resistance level based on the 15-minute candle when I map those 15-minute time frame candles. So you can see there's a lot of consolidation here and then consolidation here. So that 33.56 you can see is very important, because this is where it held and then it faded. So I would have been, if I just caught it like that and I see the breakdown but I hadn't mapped anything below it, I would have simply did that and waited to see I would not chase it. I want to see a pop. I want to see a bounce and see where it's gonna bounce and then trade it. So I'm not gonna chase weakness. I'm gonna wait for the bounce, and once I see this, that it's starting to gap up, this is, you know, a hammer pinhead candle. It ended bullish, but it's still not sure what direction it's going to go, and then it starts to break it but can't hold it. Right in here, I'm going short, risking this or risking this, depending. And I would have took a piece of that, you know, going down, hoping, looking to cover here, you know. But once I see the momentum shift, I'm covering, and you can see how it just bounced back up. Now, you know, this kind of stock I don't like, in the sense that I don't like the sideways grinding action, you know. You know, it's kind of choppy and it's just grinding. I want to see big momentum like this, big rips, big dips, because you want to get in and out fast. This grinding shit can be tough. I only like to buy this grinding shit if I'm dip buying it. I don't like to short grinding action. Like you know, it's very, you know, normally I wouldn't want to short this. Now, I might have taken a short on this if I had been watching this and saw that it couldn't hold the previous day's close price, just because it couldn't break it earlier. And its stock suddenly wants to stay red, and that's how people shorted it. And it doesn't seem like much, but if you short even 1,000 shares, like and you get this, get in on the, let's say here at like 34.95, you know, this almost went a full, you know, 75 cents. So it's you know, these things don't seem like much, but you can make pretty decent money. So that's what I'm talking about, and those are the stocks that I was looking at. I think I added these stocks after the fact. I didn't look at them. These stocks that I added in the morning, this was after the video. I just looked at them because I just found them and I was just, you know, testing stuff out. But now let me talk quickly about what I do pre-market. So pre-market, guys, what I do is, if I see stocks running because they have a lot of volume, I'll give you an example, like a stock like IZEA. This is a perfect example, and this is a perfect example of what I'm talking about. Look at this stock. Let me pull up the big chart. So I see this stock, let's say I see this stock moving pre-market, right? The first thing I do is I go back on the daily. So I go back 1 year. Usually, you know, I could go back as far as 10 years and see the stock history, all right? To see what happens, what, you know, the stock history for this, you know, for this stock, right? And this is a shitty dog shit company. You can see that it doesn't hold its gains. You know, 92 shares traded. I mean, this doesn't even count. So, you know, I'll go back, let's say just 1 year, just to see what it's did over the last year. All right, but you can go back usually as far as 10 years. Okay, so I'm going to look at 1 year. Now, when I look at the 1 year chart, all right, now this is not, this hasn't happened yet. It's starting to move, right? I'm looking at, okay, where's the consolidation? All right, so I look at consolidation as it's grinding up pre-market. I'm saying, what's the overhead resistance, right? So here, right, we got some right here. We got a consolidation, a pivot point here, right? So I would be looking to see. This has not a lot of volume, so you got to be careful how it's going to react here, because this in pre-market looked like it had more volume than it did the entire day, but there was some consolidation here. So I would be looking at that 181. But this matters. Look at this candle, 13 million shares traded, and the low was 185. This happened on July 13th. So that is super important. That's telling me that this stock is going to need a lot of volume if it wants to break and hold that 185 level. So right there, as I see the stock moving pre-market, right? So if I'm looking at it pre-market and I see it moving, I'm mapping that overhead resistance to see what it's going to do. And look at this, voila! Look where it gets to. So I don't normally would trade pre-market, but one of the reasons why I might have taken a short pre-market on a stock like this, when I rarely do, is because I say, man, on the daily, this stock had 16 million shares that day. Already, this stock is only had at this point only a couple 100,000. It's not, you know, it's gonna need a lot of volume to break through that, and it's not showing me that it's having that volume. So I'm pretty confident that this stock is gonna fade at the open. You know, so in theory, you could, if you wanted to, take a pre-market short, because look, you see what I do is I map the high and the low. So at this point, right, this is how I would have done this. I see the stock gapping up. So at this point, this is the high, right, and then this is the low, right? Actually, right here, this is the low, right, and then you see it form the high and low here. And this matters because this is where it kind of the price direction changed, right? And you got that high of 183 here. Okay, you got the high 183 here, and then you got another like pullback all the way down here, right? So I'm looking at these levels, and what I'm gonna do is, when I look at these levels, I'm looking to say, okay, now, oops, wait, I'm sorry, yeah, and then this consolidation level right here, right? There's a lot of consolidation here, so I'm looking at these levels right here. Let me. Oh, you know what? I already had all this set up. Let me move all this. I'm sorry, guys. Let me put that 185 back, because that's where the big volume was. I'm gonna put that 181 because that was the other pivot point on the daily, right? So these are the two that were on the daily, right? So I'm mapping now. So here's the high, here's the low, okay, and then I'm looking at this level here because there's consolidation here, and I'm looking at this level here because there's consolidation. So I'm mapping these levels, and I want to see how the stock reacts when it opens. Now look what happens. Market opens, the stock. Now what I'm also doing is, sorry guys, I'm going back 30 days, 15 minutes, and what I want to see is where is the next support level. All right, so where's the support level? So I'm looking to see, okay, I see now there's hardly any volume here, so it's hard to take these support levels seriously. But if I'm looking at their support right here. Right here, here's the more. This is the support that matters to me a little bit more, because there's more consolidation, even though there's like no volume. So you almost can't really pay attention to it, but you kind of have some guidance. Remember, traders are looking at some point, and then you know there is a level here. Then this is sort of where it pops and it hits the high, but it's such little volume that it's, you know, it's hard. But these are the levels that I would be looking at, okay, based on these consolidation levels below here. All right. So now I would have, this is exactly what I do. What I mapped it, and look what happens. So that's how I would have mapped it, right? I would have been watching to see how it's gonna react, and at the market open, look what happens. It can't break above this 170 level, this consolidation level. So in that 2-minute time frame, you can't break this. And this is where you can short risking off of the 170. And you know you can risk the 185 because, I mean, it would need a tremendous amount of volume to get by that 185. They got 12 million shares. That day traded 16 million. But what I would have been doing was watching the stock, okay? And this is how I like to trade it. I'm watching to see how it's going to react. Now, because in this 2-minute time frame, it can't break the 170, and I know this is a consolidation level, I would have went short, risking it, okay? Or let's say I missed my entry because it happened really fast. I'm waiting for a bounce. I'm waiting for the spike to see how it reacts to the spike. So you can see now the stock gaps down, finds support here, and when it spikes, this is what, you know, Tim Gertani, Stephen Dux, all the big short sellers do. They wait for it to find support. They wait for the spike, and they want to see how the spike reacts to the overhead resistance. And right in here, this is where everybody attacked. Anybody who's a good short seller waited for it to find the bottom, wait for the bounce, wait for that spike to see how it's going to react. Now, some people would have been looking at this, and you can say, well, why not spike here? Because you know, it starts gapping up here, and then here it can't break, so I'm gonna short, right? So you could have, you know, in theory took that, but what happens is those shorts got squeezed, those buyers came in, but they couldn't get out of here. So people who were here just probably added here, okay? They probably just added here, all right? Now, if you want to be real disciplined, if you're risking off this, then you get out. But if you're risking off the next level above, then you could have held strong. And you have to be okay. That's why I tell you guys, like, well, it's really important that not look at your P&L. Get the P&L off your screen, because if you're looking at the P&L, it's going to affect your ability to focus on the chart. You should be looking at the chart and not at the P&L, because the P&L will frighten you out a lot of times, and you don't get an opportunity to let the trade happen. And look what happens. The stock spikes, it can't hold, and right in here it goes from like that 165 level down to 140. So so like 25 cents. Now it doesn't seem like much, and yeah, 25 cents is not a ton of profit, but for these guys it is, because there's so much volume in this 2-minute time frame that they can go in really big. So another thing that these guys don't tell you that's really important is having direct access brokers is so much better to get in and out of stock. So what I mean by that is, if you use an E-Trade account like me, because I have to use it at work, if you use Thinkorswim, which is the worst, they're not direct access broker. You go through Thinkorswim and they go then to the broker. If you go through like so brokerages like Centerpoint, like Cobra, like Speed Trader, they have direct market access, so the executions are super fast, lightning fast. And that matters so much, so that you can take a lot of size and get in and out quick. When I had my Centerpoint account, I mean, my executions were so fast. I mean, like, I can't wait to go back. The only reason why I don't go back to Centerpoint or one of the bigger brokers, because I can't access it at work. I can only access E-Trade. E-Trade's not horrible, but you're not going to get executed as fast as these big brokers, and that matters a lot. So I can't take the size that I want to normally take. But these guys, they go win 20,000 shares and they get executed like that. Those 20,000 shares get executed in like microseconds, So they take 20,000 shares and they're selling on the way down. And, they come up with those $5,000, $10,000 profits. That's why they're doing. That's why you see a guy like Stephen Dux making all that money. He probably went in this candle, risking off the high day, thinking, hey, it's not going to get back up there. And he's just sizing in. And he probably took more shares on the pop and went in. And I think he made like $7 grand. And you notice he's trading out of trade zero. He's not even using Centerpoint because it's so hard to find the shares. Now, in terms of dip buying, if you're looking at this the opposite way, because I do both. I dip buy and I short. Now, if I'm looking at it from a dip buyer's perspective and I want to just buy the dips and say, thinking, all right, where the short's going to cover, if you notice, this 138 level, this is sort of where it found support, and you can see it spikes up, pulls back, and holds. Once you see that, you could go long, risking off the next support level at 134. And remember, I got the 134 because I went back on the 15-minute time frame, 30 days, and I looked to see what those next levels below were, and it's where I got the 134. Okay, because I found it right here, that support. All right, so that's kind of how I do it. you know, and you could have dip bought this, and look, and all the shorts covered, and you got that quick spike, and then you could have reshorted, because look what happens when it spikes. It can't get up to that consolidation level. Now if you're looking at this, you can say, all right, where's the other areas of consolidation? Right here, you know, you can see, all right, this is a pivot point right here, this 162. Look where it touches and then fades. So you could have reshorted here, but by then there's no shares probably available. That's what I do. Let's look at another stock, TIK. Let me remove this. Same principle. So all right, I see this is a stock where it normally trades 22,000 shares, but it went up 5 million shares. So if I'm looking at this stock right away, right, let's say I see it moving, right, so I map this. Now I may not be paying too much attention to this because it doesn't have a lot of volume. So but what I would do is I would map the high, map the low where the direction changed, right, and then map, this is kind of sort of where it kind of popped up to, so that would matter to me. And then I would see how it reacts. So look, the market opens, actually, or this matters too, because this is sort of like a pop. It popped right here, right in this direction. So look what happens. The stock opens, and then it starts getting some volume. It gets a lot of volume. Now what you want to do immediately, again guys, is look at that 1 year time frame. So I'm going right in the daily, and I'm looking, people on Twitter yapping about the stock. They're saying the stock is this. Now this stock is trash. Look what happens every time it rips. It closes low. So look at this, closes low, closes low, closes low. Has a gap to fill below. This is gonna fill that gap 100% at 260 for sure. Probably by like Monday or Tuesday. So this stock, you definitely gonna attack short. Now, because I'm looking at this wick, I'm saying, all right, I don't see where there's overhead resistance, so I'm not sure where to short to risk off of. So there's two ways to go about this. You go back on a bigger time frame, so I go back 10 years, okay, and if I go back 10 years and I see the stock moving up and up and up, I'm looking to see, okay, where's the consolidation level? All right, and I see, all right, here's a good area of consolidation, like right around here. I would look at this and I'm like, all right, is this so choppy? All right, but here's a clear directional change. Here there's a clear directional change. So I'm looking, and there's a lot of, and here, right in here, there's a lot of consolidation. So I'm looking at this level right here. So right here, I'm looking at these levels as the stock is going up to see, okay, where is there resistance, you know? And there's such little volume here that, you know, the stock probably not gonna pay attention to it, but you need something. So what I do is I let the move happen. Now you can see that this is the areas that I mapped on the daily. Now what I do is, let's say it doesn't get up there, right? So I'm saying, okay, this is the high at this point. So, right, I'm looking at this. This is the high. And it's pulling back. Look where it's finding its support. The level that we mapped, right? Because this is where the directional change was. So it pulls back to that level, right? Kind of broke below it for a second, but rips back up. And it can't hold 540 now. Look at this. And look what's happening, guys. It can't hold this candle. So right in here, this is a gravestone doji. This is telling you the stock, usually on a 1 minute especially, this is telling you a lot of times that it doesn't know which direction it wants to go to, but usually a lot of times I see this and it means that the stock is ready to pull back. Now I'm looking at a 2 minute time frame. That's why I trade, but even on the 1 minute time frame, you can see that it's not ready to break. So right in here, you could go short, risking right off that level or the high of day at that point, you know. And it's a simple trade, because if it squeezes you know, you should already have your you know, you should, well, I use mental stops, but if you want to be drastic, you could already have your stop set. But sometimes be careful, because a lot of times the market makers will drive a stock up or down intentionally to just get those stops and make more money on commissions. It's a shady business, so you gotta be careful. But right in here, this is where I would have went short, risking off of. And you can see the technical analysis. From the technical analysis standpoint, it's a good area to technically go short. And you know that the stock has a habit of closing weak. So you got the gap up, you got the pullback, you got the pop, right? You got the pop, and it can't hold. So now you're just saying, all right, you got the pop, it's not holding, it's looking like it wants to fade, and boom. And then look what happens, guys. Stock pulls back, finds support, look, pops, but now this area, the pre-market high, is acting as resistance now. So more confirmation to go short. And here's a real another. Now you have all this consolidation, and now you have an area of resistance to risk off of. So you're letting the stock come to you. You're letting the resistance form to potentially take the trade. Now the problem is that the stock, the shares may not be available to short. So what happens is a lot of these big short sellers pre-market, they're expecting to short the stock at some point, and they're borrowing shares. There's another thing that these gurus don't tell you, is that when you borrow these shares, you got to pay a fee. So you're already down on the day because you borrowed shares, and if you don't use them, you lose your money. So some people just short just because like, shit, I already borrowed the shares. So you lose double, triple. You lose on the commissions, you lose on the cost of the trade that you lost, plus you lose on the borrow fees. So shorting is not an easy thing, right? It's a stressful thing. You got to be very, very careful. So this is the best place to short, because now you see that the stock gapped up, pulled back, pop, can't hold that pop. It can't hold it. Now it's dipping below VWAP, so now it's telling you people are underwater. And look, another pop, look at that weakness. It's showing you can't. Another pop, look, it bounced, it can't hold it. And look, now this area, right, of support, look what it's acting as, resistance, price channel. It's showing you now the bears are starting to become in control. And look, bounced, came all the way back down to this level of support. You know, you got a little rip, and look at this, bounces up, look, can't break this level anymore. It's acting as resistance and then fades all day. Guys, that's how you trade. You gotta map your support and resistance pre-market. Let's look at CNET. Let me remove this. Another one. It's another thing, right? Another stock. So CNET, let's use that. And this is the last one, and then I'll call it a day. So same thing. Stock is moving pre-market. Right away, I'm looking as it's gapping up. I'm looking to see, okay, where's the overhead resistance? So I may go back 30 days and see. All right, if I don't see anything right now, it looks like this is the highest point it's been over the last 30 days on a 15-minute time frame. But it's, you know, so I would map this level immediately because I'm looking at that. But I'm also then going to go back 1 year. Sometimes I'll go 5 years, 10 years. It depends on what the chart is telling me. And I'm looking, okay, so it's gapping up. All right, where is there support and resistance on the daily? So right here, I see there's some support here, there's some support here. So I would map these levels immediately. This is what I do. This is what I do immediately. And then, you know, I already had mapped this level, and I want to see where's some more overhead resistance right here. So I would immediately map those levels, and then I would go back to the actual daily chart and look on the it got to a high of 281. So I'm mapping that, right? I'm looking to see where's the highest point of 281. I'm looking at the pivot point. So this was the lowest point, and then it pulled back here, right? And then it gapped up, and then it bounced off here as well. So I'm looking at these levels. These levels all matter to me, okay? Now, when you got that spike and you're looking at the 1 year, let me go back 1 year again. You gotta say to yourself, wait a minute, people who bought this stock that probably held through this are all underwater because they bought this all the way up here. They may have never sold their shares, so they may still be holding this, all right? Because the stock gapped up and then it pulled back. So it's a lot of, you know, there may be a lot of people may just be looking to get the hell out. And this stock doesn't have a history of holding its highs. Look at this. Every time it pops, it closes weak. So that's telling you, you know, this is a shitty company, all right? It doesn't really hold its gains. So that's another indicator that the stock may close weak. So look what happens. The stock pops up at pre-market, gets to a high of this 281, right? Pulls back, gaps up, spikes here, and then the market opens. So look what happens when the market opens. The stock pulls back, finds its support, right? Actually, double bottoms right here. But I mapped this, and remember, I got that from the daily, looking at the daily, right? I got the 221 looking at the daily, and it broke below it a little bit, found the support here, double bottom. But what I would be doing, guys, is, right? So if I see a stock tank, you know you're gonna get a bounce. Sometimes you get a big bounce, sometimes you get a little bounce. I would look to see where it goes, like pops up here. That first bounce is usually the fake bounce. It's usually the second bounce is where you're gonna get the move back up. And what you do is you look for the bounce. For me as a short seller, because I think this stock is gonna be shitty, I like to look for the bounce and then short it back down if the shares are available. So, or you could buy the dip. Sometimes I'll buy the dip. Sometimes if I see a clear momentum change, I'll take a quick rip at this and I'll go in. Like my average size usually on these like 3,000 shares, and then I'm selling into strength. So on the way up, I'm like selling, you know. And what I usually do is I look at one of the levels above to have my sell order ready, a few cents below it. So like me personally, had I seen this, I probably would have had some shares to sell already here. So I would have bought the stock and had sell orders here, like maybe like 1,000 here, and then right below here, maybe somewhere here, I would have had the rest of my shares sell. So I'm getting out all max value. Or if I want to let it ride, you know, I only take a quarter of my position. That's sort of how I do it, you know. So or sometimes I just get all out at once. It just really depends on how much size I take. So and the volume of the stock. But look what happened here. Look what it gaps up to, right to this level where it pivoted. Can't hold it. Boom. You could have went short here, risking that. And where is this? 249. Came way back down. 216 again. Found the support there, and people covered. So they just held through all this grinding shit. See what's gonna happen. They got tired. They're like, I'm not holding this shit over the weekend. And then they just got out, and that's why you got the spike. That's an artificial spike from short sellers who shorted here or reshorted here and do that. And a lot of these guys, they reshorted. This is where you wait for the spike to see how it's gonna react, and then you go. All right. The only time you buy this and expect this to break out and just run is when there's a fucking ton of volume. So like, you know, the average stock is 93,000 shares traded 4 million shares, but a lot of that happened in pre-market. And right here in the open. But if you see this is like, you know, 15 million, 20 million, 25 million shares going, like a ton of volume, then yeah, you can expect it to move higher, you know. And that's how you do it, guys. That's how you trade pre-market. You map your pivot points, and then you see how the stock is going to react. You look at the daily, you see where the overhead resistance is on the daily above and below. Usually what I like to do is I go back 30 days, 15 minutes too, to see where the stock is above and below, where it currently is on the move, you know, to find those pivot points to see, okay, if the stock is like here, where's the next level below? So I'm mapping those levels. That's how I know. So that's how I trade. A lot of trades I take, you know, like this, like I'll find a scanner and I'll trade. And then other times, a lot of times too, you know, I'll just trade off my watch list. So it just really depends. Really depends on what I'm seeing. You know, what I do now is like with Thinkorswim, it's cool. You can like have multiple charts. So what I do is like I'll create this thing where I'll have all my charts and I'm watching them here. So like for Monday, I would like put the stocks that I haven't built a watch list yet, but you know, CVSI is gonna be on that watch list for sure. So you know, right here, it's already here. CVSI is there, so I'll be watching that. And you know, I would put all the other stocks that I'm gonna put on my watch list, and that way, look at Drip. This is a stock that, you know, I had here. Look what happens. Look at this. It bounced, couldn't hold this. So this is a level that I mapped from, I don't know, like a few days ago or something like that. Look, the stock is down. This is called a bounce short, where the stock gaps down. Look at Drip. Look what happens. It spikes back to the consolidation level, can't hold it and go short. I do that all the time. My video, first red day, this video really goes into it in a lot of detail. So if you go, I forget where I put it. I don't know if I put it here.
What's up? It's Omar.
Oh, did I put it here? I forgot where I put it, but it's in one of these videos. I think it might have been for like May. It might be in my May videos. Yeah. First red day. It's Omar. It is May 3rd. First red day, and then the first day after red day. I put it in my other video. It's somewhere. It's somewhere in here. But I talk about you know, like shorting into resistance, waiting for the spike to short into. And that's how you do it, guys. These rooms that you're gonna you go into, that's what these guys do. I mean, that's what they're doing. They're trading off support and resistance, guys. It's not rocket science. The only way you're gonna learn this stuff, honestly, is by trading, guys. Watching stocks, watching tickers, trading stocks. Just take very small size. That way you can, you know, you get to deal with the emotions and see how the price action works. You guys think you're gonna join a room and you're just gonna be a pro, and it doesn't work that way. All those guys that got really good because they traded and never gave up, and they kept blowing up, and then they just kept funding their accounts and kept doing it until they got it. That's kind of how you learn how to trade. There's no like magic formula, you know. So you know, if you're gonna join a room, just make sure that if you join the room, that you know you're getting your questions answered and you're learning a strategy. Because if you're not learning a strategy, then you're not. But this strategy that this shit that I'm reviewing is the same exact thing these fucking guys would teach you. No different than what I'm showing you now. It's all about support and resistance, you know. And that's it, guys. That's it. Just price action, looking at the stocks, looking at the candles, seeing how the stocks react to support and resistance levels to either go long or go short to risk off of. That's trading, guys. So, you know, I have no problems with gurus. I have no problems with joining chat rooms if you think it's worth your while. But most of these guys are liars and frauds. And, you know, the truth is, you know, a lot of people gave, you know, Alex and Modern Rock a lot of shit, you know, and I did too, because I thought what he did was you know, the way he went about it was shitty. But the truth is, look at this, guys. You could tell. Look at this branding. They didn't put any energy in. These guys are supposedly millionaires, and this is some bullshit logo. They got all fucking, you know, Photoshop. Like, this is some bullshit that you see a 6-year-old do. This is not a real logo. It's not real branding. They didn't put no energy into this. They didn't put any energy into any of this. You know, they didn't put any energy into this. And they're right. 179 is competitive with a lot of the other rooms, but they didn't really think through about how they were going to change it. They didn't. That's bullshit. They just hyped this up to get you to join so they can get a lot richer. You know, the truth is, you don't know if this guy or Modern Rock, has anybody seen their brokerage statements? Have anybody verified their trades? No. You're just assuming that these guys are trading, and I think they are, but I don't know. I don't really know. They're not out there posting. They don't even post their trade logs. They don't post their executions, and I bet you they're still not going to do that when you're in their room. You know, trust me, man. I was curious too, tempted to see what the room would be like, but. And maybe they're legitimate. You know, maybe the room will have good information. I don't know, but the truth is that they didn't think this through. They just hyped it up and launched it, and they expect all these young kids, they're gonna join because they're kids and don't know any better. You know, so you know they didn't think this through. Like, if I do a room, like, because I keep getting asked, I have a whole, like my shit is gonna be a legitimate room where I'm gonna have classroom instructions. If I do it the way I'm thinking I'm gonna do is I'm gonna offer times, like a schedule, like where you can sign up for classes. So different days during the week, I'm going to offer actual classes that you log into, like you register for the class, and I'll review, you know, like for example, how to map support and resistance, or you know, or focus on, you know, how to know how to predict the first red day, like looking at charts, or like, you know, a class where let's review your trade. So everybody goes in and signs up for this class, and the whole point of the class is that everybody puts out their trades and we review them as a group. Like, that's what I want, real classroom instruction, so like you get real mentoring. So that's what I'm thinking, and that would all be after hours. I would, you know, if I were to have a room, we'd have a room where you would all be in, everybody be in, and I'd be in it too, but I wouldn't be able to be in consistently every single day. But the truth is, I don't want you should want to be comfortable knowing where to trade. Like, I teach you the strategy and then you just implement it as a group. You work together as a group. You know, you shouldn't need me for every single thing because I'm teaching you to be self-sufficient. That's the goal, that you don't need the guru, that you can do this on your own. That's the mentality that I have. And full disclosure, I had joined Cameron Foos's room for 2 months. It was horrible. He doesn't teach anything. He's you know, I have nothing against him personally, but he's not a teacher. He's not a teacher. He doesn't even stay in the room. And his mentee Mike, who he claims make all this money, which you know, it's possibly that he did, but none of them verify their trades. You don't know if they're really trading, and he's kind of a douche. Like, he tries to act like, in his mind, he perceives himself as nice and giving back knowledge, but really he's kind of a dick, to be quite honest with you. You know, so you know, these guys aren't teachers. That's what I'm saying. I'm a real teacher. Like, I got 20 years experience of education. You know, so. So I got some things that I'm lining up and I'm thinking about. You guys let me know what you're interested in, but I got some cool things that I'm planning. I'm just not sure if I'm going to do it, if and when I'm going to do it, if I even do it. But you know, you guys let me know if you're interested. But if I do something, it's going to be legitimate. All right, folks. So have a great weekend. Let me know what you think. Leave comments. You know, hit me up on Twitter. Hope you found this helpful. And I'll see tomorrow if I make another video building my watch list for Monday. All right, so have a great weekend, guys.